As a senior financial executive, you are the captain of the financial ship. Your role is pivotal, guiding the vessel through both calm and stormy seas. You set the course and make sure the ship reaches its destination. This involves strategic planning, foresight, and a deep understanding of the financial landscape. This is a huge responsibility. Every decision you make can have far-reaching consequences, affecting not just the bottom line but the livelihoods of everyone involved. The decisions you make impact everyone on board. Your team relies on your leadership to navigate through financial challenges and seize opportunities. Your focus must be on creating value for your shareholders. This means not only generating profits but also ensuring sustainable growth and long-term success. They are the ones who have invested in your company. Their trust and capital are the lifeblood of your organization. Your job is to make sure their investment grows. This requires careful analysis, strategic investments, and prudent risk management. You need to think long-term. Short-term gains can be tempting, but they should not come at the expense of future stability and growth. Don't just focus on quick profits. While they can provide immediate satisfaction, they often lead to unsustainable practices and potential pitfalls. Build a company that will stand the test of time. This involves fostering a culture of innovation, resilience, and ethical practices. It's about creating sustainable growth and prosperity. Your vision should encompass not just financial success but also social responsibility and environmental stewardship. Remember, a captain is only as good as their crew. Empower your team, invest in their development, and cultivate a collaborative environment where everyone can thrive. So, what exactly are you responsible for? First and foremost, you need to be a strategic thinker. You need to understand the financial landscape and make smart decisions. This means analyzing financial data, identifying trends, and forecasting future performance. You also need to be an effective communicator. You'll be communicating complex financial information to both internal and external stakeholders. This includes your board of directors, investors, and employees. They need to understand your financial strategy and how you plan to achieve it. You are the guardian of the company's finances. Let's talk about profit. Yes, profit is important. It's what keeps the lights on and allows your company to grow. Without profit, a business cannot sustain itself, pay its employees, or invest in new opportunities. Profit is the lifeblood of any business, providing the necessary resources to innovate and expand. But it's not the only thing that matters. In today's world, you need to look beyond the bottom line. Focusing solely on profit can lead to short-term gains, but long-term problems. Companies that prioritize profit above all else may neglect other crucial aspects of their business. You need to consider the risks and uncertainties that come with doing business. Every decision carries potential risks, and understanding these risks is essential for long-term success. Ignoring them can lead to catastrophic failures. What happens if there's an economic downturn? Economic cycles are inevitable, and businesses must be prepared to weather these storms. A downturn can affect sales, cash flow, and overall business stability. What if a new competitor enters the market? New competitors can disrupt your market share and challenge your position. Staying ahead requires constant vigilance and adaptability. These are the types of questions you need to be asking yourself. Regularly evaluating your business environment and potential threats is crucial. It helps in making informed decisions and staying proactive rather than reactive. And you need to have a plan in place to mitigate these risks. Risk management strategies and contingency plans are essential tools. They provide a roadmap for navigating through uncertainties and ensuring business continuity. Remember, sustainable growth requires a balanced approach. It's about finding the right equilibrium between profit, risk, and long-term stability. A balanced approach ensures that your business can thrive in various conditions.
Sustainable growth is about more than just making money. It's about building a resilient business that can adapt to changes and challenges. This involves investing in your people, processes, and technology. It's about navigating through uncertainties and ensuring the company can withstand various challenges. This means being prepared for market shifts, regulatory changes, and other external factors that can impact your business. By considering risks and planning ahead, you can create a more resilient and successful business. A proactive approach to risk management and strategic planning can set your business apart, ensuring long-term success and sustainability.
How do we measure the success of your financial leadership? One word: shareholders. They are the heartbeat of your company, the ones who have placed their trust and money in your hands. They are the ultimate judges of your performance. Their satisfaction is a direct reflection of your effectiveness as a leader. And their scorecard is simple. Are they getting a return on their investment? This is the fundamental question that drives every decision you make. This return comes in two forms: dividends and market valuation. Dividends are the tangible rewards shareholders receive, a direct share of the profits. Dividends are payments made to shareholders from the company's profits. They are a sign of a healthy, profitable company that values its investors. Market valuation, on the other hand, is the price investors are willing to pay for your company's stock. It reflects the market's perception of your company's future potential. Both are important indicators of shareholder wealth. Dividends provide immediate returns, while market valuation offers long-term growth potential. Your job is to maximize both. This requires a delicate balance of short-term profitability and long-term growth. And you do that by making smart, strategic decisions that drive long-term growth. This involves careful planning, market analysis, and a deep understanding of your industry.
As a shareholder, I look for consistent dividends and a strong market valuation. These are the signs that the company is well managed and has a clear vision for the future. These factors show me that the company is not only profitable, but also valued by the market. It gives me confidence in the leadership and the strategic direction of the company. It's a sign of smart leadership and a sustainable financial strategy. A company that can deliver on both fronts is one that is poised for long-term success and continued shareholder satisfaction.
Section 5. The triple bottom line: balancing people, planet, and profit. Now let's talk about the bigger picture.
As a financial leader, your decisions don't just impact your shareholders. They impact your employees, your customers, and the world around you. This is where non-financial goals come into play.
We're talking about things like social responsibility, environmental sustainability, and ethical business practices. These aren't just buzzwords. They are essential for long-term success.
Consumers are becoming more socially conscious. They want to do business with companies that share their values.
Section 6. The ethical tightrope: navigating profit and principles. Let's be honest, there's often tension between profit maximization and ethical considerations.
It's easy to get caught up in the pursuit of profit and lose sight of what's right. That's why it's crucial to have a strong ethical compass.
You need to be able to make tough decisions even when they're unpopular, and you need to be transparent in your dealings with all stakeholders.
Remember, trust is the foundation of any successful business. Once it's gone, it's very difficult to rebuild.
Section 7. The long arm of the law: government and financial responsibility.
The government also plays a role in ensuring ethical and responsible financial management. There are laws and regulations in place to prevent fraud, protect investors, and promote fair competition.
As a financial leader, you need to be aware of these regulations and make sure your company is in compliance. This isn't just about avoiding penalties. It's about maintaining the integrity of the financial system as a whole. Section 8. Walking the talk: sustainable and responsible financial management.
So, how do you balance all of these competing priorities? How do you maximize shareholder value while also being a responsible corporate citizen? It starts with a commitment to sustainable and responsible financial management.
This means making decisions that are not only financially sound, but also socially and environmentally responsible. It means investing in your employees, your communities, and the environment. Section 9. Building a legacy of value.
Remember, you are not just building a company, you are building a legacy. You have the opportunity to create something that will last for generations, something that will make a positive impact on the world.
That's the true measure of success. It's not just about how much money you make, it's about the difference you make in the world. Section 10. Conclusion: the future of finance, a holistic approach. The world of finance is changing. It's no longer enough to just focus on the numbers. You need to be a strategic thinker, an effective communicator, and an ethical leader. You need to be able to balance the needs of all stakeholders. You need to think long-term and make decisions that are sustainable and responsible. That's how you build a successful company. That's how you create lasting value. And that's how you make a difference in the world.